Let's dive into the fascinating world of market makers and specialists. Now, before you start picturing someone in a fancy suit, sipping espresso while making trades, let's break this down into something that's not only digestible, but also enjoyable. After all, investing should be fun, right? So what exactly is a market maker? Imagine you're at a bustling farmer's market. There are stalls everywhere, and you want to buy some fresh strawberries. But wait, there's a stall that always has strawberries, no matter what. That stall is your market maker. They're there to ensure that you can always buy strawberries, even if the other stalls run out. In the stock market, a market maker does something similar. They're the ones who provide liquidity. This means they're always ready to buy or sell stocks, making it easier for you to trade without having to wait around for someone else to step up. Now, how do they do this? Market makers hold a certain number of shares in their inventory. When you want to buy a stock, they sell it to you from their inventory. If you want to sell, they'll buy it from you. This constant buying and selling helps keep the market moving smoothly. Think of them as the friendly folks who keep the wheels of the market turning, ensuring that you don't have to wait for ages to get your strawberries, or, in this case, your stocks. But here's where it gets interesting. Market makers don't just operate out of the goodness of their hearts. They make money through the spread, which is the difference between the price they're willing to buy a stock for and the price they're willing to sell it for. So, if you want to buy a stock for $10, but they're only willing to sell it to you for $10.10, that 10-cent difference is their profit. It's a win-win situation. You get your stock, and they get their cut. Now, let's talk about specialists. In the past, specialists were the ones who managed specific stocks on the exchange floor. They were like the gatekeepers of certain stocks, ensuring that there was always a market for them. Imagine a small-town diner that's famous for its blueberry pie. The diner owner is the specialist for that pie. If you want it, you know exactly where to go. Specialists would maintain an orderly market for their assigned stocks, stepping in to buy or sell when there was an imbalance in supply and demand. But as technology has advanced, the role of specialists has evolved. Nowadays, many exchanges have moved towards electronic trading, and the need for human specialists has diminished. However, some exchanges still have specialists who play a crucial role in maintaining market stability, especially during times of high volatility. They're like the calm in the storm, ensuring that trades can happen smoothly even when the market gets a little wild. Now, you might be wondering, why should you care about market makers and specialists? Well, understanding their roles can help you make more informed decisions as an investor. When you place a trade, it's often a market maker who's on the other side of that transaction. Knowing that they're there to facilitate your trade can give you peace of mind. You're not just throwing your order into the abyss. There's a system in place to ensure that your trade gets executed. Moreover, market makers and specialists can impact the prices of stocks. When there's a lot of buying interest in a stock, market makers may raise their selling price to manage their inventory risk. Conversely, if there's a lot of selling, they might lower their buying price. This dynamic can create fluctuations in stock prices, which is something to keep in mind as you navigate your investment journey. Let's not forget about the importance of liquidity. When you're investing, you want to know that you can easily buy or sell your stocks without causing a significant price change. Market makers provide that liquidity, making it easier for you to enter or exit positions. If you're a new investor, having that assurance can be incredibly valuable. It means you can trade with confidence, knowing that there's always someone there to facilitate your transactions. Now, let's talk about the impact of technology on market makers and specialists. With the rise of algorithmic trading and high-frequency trading, the landscape has changed dramatically. Market makers now rely on sophisticated algorithms to execute trades at lightning speed. This has increased competition among market makers, leading to tighter spreads and better prices for you, the investor. It's like having more stalls at that farmer's market, all competing to offer you the best strawberries at the best price. But here's a little nugget of wisdom. While technology has made trading more efficient, it's essential to remember that investing is still about people. Behind those algorithms are skilled professionals who understand the market dynamics. They're the ones who analyze data, assess risks, and make decisions that can impact your investments. So, while you might not see them on the trading floor, their expertise is still very much at play. As you embark on your investment journey, keep in mind that understanding market makers and specialists is just one piece of the puzzle. It's about building a solid foundation of knowledge that empowers you to make informed decisions. Investing doesn't have to be intimidating. With a little curiosity and a willingness to learn, you can demystify the complexities of the market. Market makers and specialists play a vital role in the functioning of the stock market. They provide liquidity, maintain order, and help ensure that you can trade with confidence. As you explore the world of investing, remember that these players are there to support you. So the next time you place a trade, take a moment to appreciate the behind-the-scenes work that goes into making it happen. Investing can be a thrilling adventure, and understanding the players in the game is just the beginning. Happy investing.